Good morning, friends. Today is 12th September 2024. Due date of furnishing tax audit report is very near. On this very day, I like to deliberate some of the key considerations for preparation of Form 3CA, 3CB and Form 3CD. SSC is responsible for preparation of Form 3CD. Auditor will report in Form 3CA or 3CB annexing Form 3CD. This deliberation is useful for chartered accountants, for students, for business owners. Let us start with due date of conducting tax audit. Due date of conducting tax audit is 29th September 2024. It is not the 30th September 2024. If we go through clause 44AB minutely, it says every person carrying on business shall, if his total sales, turnover, or gross receipts, as the case may be in business, exceeds or 1 crore rupees in any previous year, get his accounts of such previous year audited by an accountant before the specified date and furnished by that date. Specified date is explained in proviso to section 44AB. Specified date is 1 month prior to due date of furnishing return under section 139(1). Due date of furnishing return under section 139(1) is 31st October. Specified date is 1 month prior to that 31st October, that is 30th September. And audit must be conducted before specified date. So specified date is 30th September, before specified date is 29th September. So tax audit must be conducted by 29th September, not 30th September. Let us come to next point, generation of UD. Auditor is conducting tax audit on 29th September. So generation of UD must be on 29th September. In the balance sheet, signing date must be 29th September. And from this year, UD is required to be reported in ITR form also. It is required to be reported in financial statements, balance sheet, profit and loss account. It is required to be reported, updated in income tax portal. In any case, if there is any UD missed, generation is missed, then within 60 days it is required to be generated. Let us come to very important point, that is newly inserted section 43B subsection H. This is started from the assessment year 24-25. Section 43B subsection H deals with the allowability of expenditure on payment basis. Now this section says if the payment is made before due date of furnishing income tax return, then that expenses will be allowed as expenses. But section 43B subsection H, which is inserted from this assessment year, is something different. This is related to payment to micro and small enterprises. Section 15 of the MSME Development Act stipulates the due date of payment to the small and micro enterprises. If there is any agreement, it must be paid as per the agreement, but not later than 45 days. And if there is no agreement, then appointed date, which is 15 days. So if the payment is not made within 15 days or 45 days, it will be disallowed. Now, it is the responsibility of the assessee to get details from the vendor whether they are micro enterprises or small enterprises. It is not possible for auditor, or it is not the duty of the auditor to get the details from the vendors of the assessee. So, assessee is required to take details about the vendors and report and report to the auditor. And if it is not possible for the assessee whether the vendor is micro and small enterprises, then auditor may put his observation in Form 3CA or 3CB. Regarding interest component, if there is any interest paid or payable to the for default in payment to the small and micro enterprises, and if it is debited to the profit and loss account, the expenses will not be allowed. One thing to remember, that trader is not covered under this act, and medium enterprises is not covered in section 43 subsection 8. Now let us come to next point, that is the clause 44. Clause 44 is the breakup of total expenses of entities registered or not registered under GST. It is not required to report item-wise expenses. Total expenses is required to be reported, and expenditure relating to goods and services exempt from GST, relating to entities falling under composition scheme, relating to other registered entities, expenditure which is non-GST item, etc. etc. In total, it is required to be given. Now, 2 points I like to convey, that bad debt, depreciation, these are not the expenses. So these expenses are not required to be reported. And expenses means revenue expenses as well as capital expenses, not the revenue expenses only. And next, Schedule 3 to the Central Goods and Services Tax Act provides some transactions which are neither goods nor services, like salary to the employees. So this salary to the employees is not required to be reported. Now let us come to a very important point, that is the turnover. Section 44 AB stipulates the condition for tax audit. Every person carrying on business shall, if his total sales, turnover, gross receipts, any business exceeds rupees 1 crore any previous year, get his accounts audited before specified date. In case of professional, it is 50 lakhs. This turnover excludes GST. This turnover includes scrap sale, even if it is shown under miscellaneous income, it is the part of turnover. Assessee carrying one or two business, then all the this businesses to be taken together for determining the whether tax audit required or not. In case of travel agent, if the travel agent takes money from the client for booking railway ticket, airfare ticket, that is not the part of turnover. If there is, but in case travel agent is conducting a package tour, that is the entire amount is the turnover. And in case of speculative transaction, this positive and negative sum, aggregate of both positive and negative differences is the turnover for the purpose of tax audit. It is applicable for derivative transaction also. Now, it is not the turnover only. If the receipt is more than 1 crore, then tax audit is required. Support a business builder. Builder takes advance from the prospective buyer at the time of construction of building, and he has not yet sold any flat, then sale is nil. But since the receipt is more than 1 crore, it is required to be audited. Now, regarding partners of a partnership firm, if partner gets salary more than 1 crore from a partnership firm, this salary is taxable under the head income from business or profession. But since this amount the partner is receiving not running a business, it is not, the partner is not required to get his accounts audited under section 44 AD. AB. Thank you very much.